Hi everyone, it's Roland Kym here with the Kimbuna team with Keller Williams, and it's mid-October, giving you the market update right now for the Metro Vancouver area. And I'm glad you're watching this video. Keep in mind that your situation is personal, it's specific to you, so please reach out, as most of you do, to talk about how this market report and update affects you, and we can chat further. But in general, so let's talk a little bit about last month. September of 2024 finished with 1,852 transactions last month, which represents a 3.8 reduction in transactional volume over the same month 1 year ago. So we're a little bit down last month. And when I look at the long-term trend, we are down about 25% in transactional volume versus the 10-year average in the Metro Vancouver area. However, 15 days into October, we're starting to see a little bit of a reversal, a trend change. So as of October 15th, there was 1,355 transactions in the Greater Vancouver Real Estate Board. That's an average of 90 deals per day. It's increased a little bit today to 92 deals on average, with 17 days into October. So what I am seeing is around 2,800 to as high as 3,000 transactions are estimated that will complete in October of 2024, which will represent a 40 to 45% increase versus October of 2023. And such a unit load would be the busiest month we've had all year in 2024. That is trending to be a very, very busy November and December of the year. So it's going to be a end-loaded 2024 on the transactions. So in the Greater Vancouver area as well, the average home price, if there is such a thing as an average home, is last month was currently at $1,252,000 with change. That represents a 4% decrease versus the same month 1 year ago. So it's a 4% decrease in the average price in the Greater Vancouver area versus last year. So on further good news is a couple days ago, Canadian inflation rate came down and it reduced to 1.6% from the previous month. We are now well in that range where the Canadian government wants to be to keep inflation around 2%. This is going to give them a lot of allowance to reduce rates in the months ahead. The only headwind of the Canadian government preventing them from reducing rates is the fact that we tend to want to do that along with the US, and the US is not showing signs that they will be lowering interest rates at the pace that we will. So great news all in all that inflation is down to 1.6%, because I am expecting a pretty hefty rate decrease for the next Bank of Canada meeting as a result. And so coming up to that forecast, this forecast is from CIBC. It's from a couple months ago. CIBC is always great with their estimation, and they were pretty proactive in providing a long-term Bank of Canada rate forecast. And so what we see here, we're currently in October of 2024. We're sitting at 4.25%. I am expecting that the next Bank of Canada meeting, which is October 23rd, that the Bank of Canada will reduce their rate by 50 basis points. So I think we'll end up by the end of October to be around 3.75%. And we'll see, but that's what I'm projecting based on all the things that I'm taking in and digesting. And what you see here is for the balance of 2025, you're going to see a pretty steady price, overnight rate decrease, which constantly, along this path, we'll see new buyers coming into the marketplace, because right now at 4.25, we're down from 5.25, but once we get into the low threes and high twos, that is making a substantial difference for folks who currently don't qualify for the amount of borrowing that they want, and they will by mid to later next year for sure. So that'll be a whole new entrance of buyers that are currently not in the market, not able to get into the market. What we see here is the Bank of Canada overnight projection in a graph form. And what you can see, we're right here. As I was mentioning, we're on a pretty steady downwards trend right now, especially with inflation being below 2%. And we are going to see a steady decrease of Bank of Canada overnight interest rates until it kind of steadies around the 2.5% later into 2026 and beyond. What we're also seeing is that year to date, housing starts are down in Vancouver by nearly 20%, 19%. So this is not great in providing more housing options. It's not helpful in, helping try and maintain the average price for the Vancouver home in the years ahead. We see that we have not been able to change the narrative about how we're building or how we want to build more inventory. On the more inventory front, you may remember, I've mentioned this before, and if you were watching the federal government budget come out, they were projecting gallantly, and no one called them out on it initially, that by 2030, they're going to somehow build 4 million new homes. Based on where we are, we're not even reaching 50% of those construction needs currently. And so it's completely unattainable, that projection that they made. That being said, I did read a report here from the Business School of Concordia University, and based on their calculations, they estimate that by 2027, the average rent of a two-bedroom in Vancouver is going to increase by as much as 52%. It's going to go to an average cost of $5,200. That's pretty crazy. Pretty crazy. That being said, why is that happening? Well, we continue to have a vast number of people move to Vancouver. I am sorry if you hear a lot of noise in the background. Someone's actually constructing a building nearby, and so they're putting in the infrastructure. So finally, some houses are being built, and they're disturbing my noise, but not enough, I guess. All right. Yeah, keep in mind that since 2021, June of 2021 to June of this year, rents rose in Vancouver 40%. So that 50% estimation is not unheard of in the future. It really asks yourself, though, how will that be financed by the tenants? And, what could we do to bring more inventory to the market to help out there? Anyway. Okay, so in summary, I think it's a really steady market that we're flowing through. The prices are pretty consistent. If you're a buyer, the next 5 months are the best time to be a buyer because there'll be a lot more people in the market 9 months from now, 6 months from now, and that will put some pressure on inventory. Will definitely put some pressure on prices. And so get out there, take a look. If you're a buyer, if you're a seller, don't assume that everything will sell. Don't put up a price that you think the market's going to grow into. Make sure that you are priced to market. Some categories of properties are very busy. Some are very stagnant. And it's actually surprising some of the categories of inventory that we have that are really not moving, where we're priced really, really well and we're just not getting the offers that we need. So as a seller, make sure you're priced correctly and be realistic based on what your needs and your timeline are, because not every listing sells in this type of market. So you can be out there for a long time and really never in play. 2025, we'll see a large interest rate slide going down into the low threes, high twos, and sales activity appears to be getting busier. And I estimate that the next 12 months will be a very busy market ahead of us. Thanks, everyone. Please reach out to me if I can assist you in any way. Sorry for the background noise.